All right, everybody. Good morning. Hope everyone had a good weekend. Stocks by the numbers. Welcome back. Wanted to do a nice pre-market video here because we have good news coming out of DC, and we have news now that we're kind of on an even level playing field with China when it comes to these trade tariffs, this trade war, so to speak. And we got news that the U.S. is going to cut the tariffs on Chinese goods to 30% from 145%, and China is going to cut tariffs on U.S. goods to 10% from 125%. So this is what Trump was talking about, right? That we had kind of, it was just out of proportion what we were being charged compared to what we were charging them, and he just wanted to level it out a little bit. So that's why we initially got news about the tariffs, and everyone thought it was going to cause mayhem. But as a lot of people were saying, hey, listen, I think this is just, part of the negotiation. This is the whole art of the deal. He's using the leverage and, he's bumping up numbers and just waiting for them to lower numbers, and then he'll lower our numbers, So it was a whole volatile experience, right? That lasted for a couple of months, really, if you think about it. We've been pretty volatile for about the last 4 or 5 months since the ball dropped, really, after peaking. But now we can see right here, we have futures up bigly right now. We have S&P up about 3%, Dow futures up about 1,000 points, 2.4%. NASDAQ climbing, right, because tech was taking the biggest hit because we were worried about that hurting the profits of all these tech companies. So now they're all popping up. They're all 5, 6, 7% up right now as we speak. So NASDAQ up almost 800 points, was up a little bit more, probably will pop and continue to climb after the open, in my opinion, about 1 hour from now. But up almost 4%. Russell 2K, right? That's our small cap index. That's up about 4.5%. VIX dipping down. In my opinion, if we are going to rally now, 3 out of 5, 4 out of 5 days this week, if you want, in my opinion, if you're looking for a trade, maybe consider VXX, right? Which is the ETF that tracks the volatility of the S&P. So now if something like the S&P is going to remain solid and we're going to climb the bulk of the days this week, then maybe some VXX puts, right? Could generate you maybe even a quick 40-50% if you want to be in and out, not risk it too long. But just an idea, my opinion, something to consider. But we can see gold pulling back about 3.5%, and gold was raging like an animal. And we were also talking about silver now having its day come through. But on this news, gold and silver obviously pulling back. Oil, though, oil running up about 4% right now. We'll see if that holds in about an hour when markets open, but silver down about 1.6% or about 50 cents right now. But switching over here, we can see something like Tesla up 8%, 322. So if we stretch it out, yeah, you can see I had this trend line coming across here, which is basically where the stock came to just the other day, and it looked like we stopped. We started to go sideways a little bit, and now on today's news, boom, we pop up right above this trend line. And if we're just going to be on the up and up now, whether we feel a stock may really deserve it or not, now we have to start looking at the technicals a little bit on this news, because if we were near a lot of these key levels, whether they were support or resistance, if the stock is now back above the support, now it's technically bullish. And if the stock, of course, breaks above the resistance level, it's technically bullish as well. And you can see that Tesla stock popped essentially right back to these two lows. And you can see basically right there at that bottom of that candle before it had the big drop down. So it's back to this key level here, which means it could probably get to the mid-range of it at least, right, which is 347. But you can see this other trend line coming up across. I mean, if it really wants to rock and roll, it can climb back up to over $400 a share just inside of the next week or two off of this news. But I just wanted to showcase a lot of the tech companies that we were watching that were suffering a little bit. Something like AMD we were watching over the last couple of months. I still say, again, may have been early, but in my opinion, I don't think we're wrong here on this one, especially over the long term. If you can just keep accumulating and just give yourself some time and just be patient with it. But you can see something like AMD that was down on the tariff worries is up 6.75% right now. Got up to almost 111 here. It hit 110.70 a little while ago, sitting now slightly below 110. Let's check Palantir. Palantir up also pre-market 4.2%, back up above $120 a share. We're seeing big bumps across the board here. DraftKings back up to almost $38 pre-market, 1.5%, 4.2%. How about IBM? Yeah, IBM seeing a little bump as well, 1.5%. I also saw Disney. Yeah, Disney was climbing up 108.90. They recently beat earnings, and as much as I personally don't like Disney, you can see that we had this other trumpet that we were watching for a while. Then we had the break. I spoke recently here about these trend lines. This was a 50-year support level that Disney broke below, but ended up bouncing back. And then, of course, they had earnings come out, and they ended up beating on the top and bottom line. So that's helping to pump them up even more. But now we're back here, so in my opinion, probably back above 110 for Disney. You could probably see 113 to 115 potentially on Disney, something to consider. Actually, the Dow components seem to be just kind of hanging out, right? Look at something like Verizon's actually down 1%, and you got something like PM actually down 2%, right? Because in theory now, supposedly the money should be flowing. Well, not all the money, right? But some money should be flowing out of these Dow component dividend players that were the safe havens that you recently saw bumps in, right? Like VZ and PM. And now the money's flowing out and it's going into these tech stocks. It's flowing back into the tech sector and other companies as well, right? Something like Dollar General that I spoke about in the past. Something like that's probably going to benefit about on this news, right? Because we know that a lot of stuff in those dollar stores technically, comes overseas from China, Taiwan, maybe. So now if a lot of those tariffs are going to start coming back down because we're negotiating with all these countries, then the worry about eating into the profits of these businesses is going to get swept underneath the rug, right? And something like Dollar General, even I remember looking at it back in the low 70s, even something like DG. Look, I mean, technically it's not moving right now, but in theory, again, in my opinion, it makes sense that it actually should be up. But we were talking about the gap fill back to 100 plus, but we were just looking at the fundamentals here over the last quarter or two. And again, did a video here after these earnings, followed it down here into the 70s, and the stock slowly came back up, almost hit 100 recently, right? So it's just like we saw with PayPal, right? It's the Buffett method all over again. You find a brand name company that has decent, growing, solid, stable, consistent fundamentals, and then if they sell it off and chunk it down, you let them beat it up, and then you scoop in, you start to accumulate your shares, build your position, and boom, you catch that U-turn, that rebound recovery. But a lot of other names I was looking at as well. Pre-market, we have SoFi up now. Yep, above $14 a share, 6.75%. We had LAC up about 3% right now pre-market. And of course, we have our most interesting trending stocks that we all look at here. Something like SMCI, you can see, of course, was in the crosshairs as well when it came to these tariffs, and the stock up right now almost $34 a share. Was up to about 34 and a third, but it's up here right now 6% pre-market. Market set to open in about an hour, but again, basically all big tech getting a big jump here. How about Dell? Out of curiosity, is Dell? Yeah, Dell's seeing a 6% pop right now, back above $100 a share, but just wanted to do a little pre-market update here and let everyone know, if you didn't, about this China tariff rate change news that we have going on here. Also, oil, I wanted to show you guys as well. Oil, I was showing a lot of these trend lines here, and again, I know it's confusing, but we were down here in this channel. Again, we had the big breakout. This was the key level. We flash crashed below, dropped bigly down here to this fib level. You can see came back to the moving average, dropped back down to the fib, almost for the most part made a double bottom, and then we recently had a bounce here getting back to the moving average. And of course, on this news today, we also have oil climbing up 3.8% currently right now, $63 a share, and we're back above the moving average. So in my opinion, I think it retraces back to our key trend line here that we were watching not too long ago, which is the high 67s, maybe almost $68 a barrel. So the ETF for oil again is USO, US oil ETF. That goes up and down with the price of oil. So if you wanted an option play for that, you can consider maybe USO calls, in my opinion, maybe over the next week or two. Yeah, stocks up, dollar surges, oil surge, US China slash tariffs. So again, they say China's like the biggest market, and that's why when he mentioned beefing up tariffs on China, everyone got worried and everything started dropping because they know how big of a market the China market is, right? So now if we, again, got tariffs more in line and it's more proportionate now, it's more fair for everybody. So now hopefully that is going to be old news. It says this is currently kind of in place for the next 90 days, I believe. Let me just check here. The U.S. and China have agreed to mutually reduce tariffs for an initial period of 90 days. As trade negotiations continue, the U.S. will cut tariffs on Chinese goods to 30% from 145%, and China's cutting the tariffs on U.S. goods to 10% from 125%. So, again, if it was out of proportion, coming down for us to 10%, sounds like we, might be sitting a little bit better on this side of the deal now. So hopefully that'll all play out. But this is what we were talking about when we initially spoke about the Trump presidency when he was coming in at the end of last year, right? We were saying that he's going to kind of rock the boat a little bit. And it's going to be with a slew of things, I think, in my opinion. I think we're talking about a lot of big industries that might be coming after, right? When we talk about like the food and beverage industry with RFK, and I was worried about pharmaceuticals and whatnot, I still don't know what's coming because I still feel like at any moment they're going to start dropping big hammers. And they interview who's the guy, the border guy, right? Tom Homan, I think. And I don't know. I have a feeling like they're going to start dishing out subpoenas, and they're going to start going after some people, because I have a feeling that there is some shady stuff going on behind the scenes and they have evidence of it. And I just think they're kind of pacing themselves and waiting for the right time. Now, technically, I really don't know if that'll affect the markets too much. But, just overall in general, I just feel like it's very hard to time and predict what is coming under this administration with the way Trump kind of does his own thing. So unfortunately, you gotta kind of just try to position yourself properly. We speak about proportions, right? You got 60-70% into stocks, maybe 10-20%. You got your index funds or maybe some bonds if you want to have a conservative holding, right? Try to have maybe 5-10% in a hedge, something like a gold or a silver, or even if you buy the VIX itself. And then, of course, try to keep some cash on hand. And if you try to keep a balanced portfolio like that, even when you get news like this, yes, we popped and you may have not, been able to buy all stocks at the bottom, but now you kind of see what direction we're moving in and you can ride that momentous wave, right? We also spoke about hymns. I know I posted this in the Discord as well. This right down here was where I did a video. Stock was at about $27.50, $28 a share. I spoke about the cross on the resistance level here that I was watching and the fact that we were approaching the moving average. And if we broke up, we would probably run back up to this trend line at least, back to about $40, because hymns has had decent, growing, consistent revenue, right? So that's why something like that you buy on the dip, because as we start to bounce back, it's going to be one of the names that's going to immediately spike up and regain a lot of its value where it was. And you can see that the stock closed up to $52 and now it's at 56. It's above the trend line. It's on its way up to this trend line, right? So if we extend this right here, I mean, you can see we're technically talking about new highs, $80+ a share, but even conservatively now with the stock above 56, that's above the fib here of about 55.47. So next stop might be 60+, back to about 64.25. So that might be coming for HIMS, but you can see I did the preview of HIMS earnings right here. It was just before, a couple of days before they were reporting earnings over here. They reported earnings over here. I mentioned the cross above resistance, said it was going to go to 40+, $40 jump coming soon. And boom, that's exactly what it did. You can see a beeline just within a couple of days straight up to that level. And then earnings came out and just pushed it up even more. And of course, we have the news now. And HIM's up 8% right now pre-market. But that's pretty much it. Just wanted to update the news and look at a couple of stocks pre-market. I'll end it there. So like the video, obviously subscribe, thumbs up, all that stuff helps out the algorithm. And yeah, hope everyone has a good Monday and has a good week. Thanks for coming by. Have a good day.